Hello and welcome to episode 30. This week we reveal who won the battle between the S&P 500 and the Nasdaq. We have a portfolio update and we battle two more stocks against each other with this week's theme of AIM-listed companies. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. A battle for the ages, the S&P 500 versus the Nasdaq. It's going to be exciting keeping an eye on this one over the next few months because this week's winner was the Nasdaq.
3, 2, 1, go.
Last week was another red week with everything down. The Battle Royale even underperforming the benchmark and falling a huge 2%. This week, however, everything in the green. I've never been so happy to see a colour. Not by much, but moving in the right direction. The Battle Royale still underperforming the benchmark, but as it's underperforming in the right direction, I'm not too worried. The biggest movers is at least split between positive and negative for a change. Expedia doing the best and Reddit falling the most. The update is that Oxford Lane Capital is buying some of its equity back, so it at least thinks that it's trading for a good price. Looking at our holdings in the Battle Royale and keeping an eye on this total return column. On the beach, still going nowhere, the best performer with 58%. There have been a few more changes, however, with Spotify ousting Tesla, or maybe Tesla just dropping by itself. So a few changes in the leaderboard. One of our new holdings, Nvidia, managed to fall 3.3% throughout the week, so not doing too well for us yet. At the bottom, a few more changes. Reddit is just down another 10%, down 37% for the year, so not looking good. But at least it makes B&M look a little bit better. Black Rifle, the one we still want to keep an eye on because that news coming out of that company is not great. Still down at the 30 mark, and there's just a huge amount falling in double figures, so not great reading at the moment. In adding Nvidia, we've just added another loser to the list, so we're up to 28. That's 18 making a loss and only 10 making a profit at the moment. The income generator is now paying us £21.82 a year. That's up from £21.06 last week. The December payment of £2.43 can now be added to £4.46 for the next payout, which is taking place in April the 2nd, leading us to a payout of £6.89, which following receipt of that on the 2nd of April, we'll do a special episode where we award that to somebody, so I'm looking forward to that. We've now added £700 to each of our three portfolios. Definitely the biggest argument for investing. Just keep going slowly and it all adds up. Performance-wise, however, not so great. The Battle Royale and the benchmark both in the red. Income generator in the green, however, so not all bad. This week, they've clawed back some of those losses. The Battle Royale now down 4.4%, underperforming the benchmark, which is also down 1.5%. And overall, we've now contributed £2,056. It's costing us £34 to be invested, but we're making £39 in dividends. So on the whole, and advice to anyone who is thinking about investing, so far, even in the market correction, we're coming out on top. So I would recommend go for it.
3, 2, 1, fight.
The Alternative Investment Market, or AIM, is a specialised unit of the London Stock Exchange which caters for smaller, more risky companies. And as the bottom falls out of the market, why wouldn't we look for more risk? The AIM companies are more speculative and therefore could have a higher upside, so they are undeniably more exciting. Let's take a look at a couple and see what we think. First up, we have a company called TriStill. This has been spoken about by the gentleman from the Playing FTSE podcast, and they also have a YouTube page where they speak about this. I'll put a link to that in the description. They go into a great bit of depth and tell us about this company that manufactures and sells infection prevention products, and it sounds quite clever, and there's a lot of unique IP where they just simply wipe a hospital product or a hospital surface and it disinfects it magically through chemicals that none of us understand. The company looks fantastic. It's, according to Simply Wall Street, 32.6% undervalued. It's got strong future growth. It's got a great balance sheet with substantial earnings for an AIM-listed company, and its financial health is good. It pays a little dividend, although the Playing FTSE guys aren't too keen on that, which is fair enough for a growth company. I think I do agree with them. So I think this is a great option. The question is, what can compete with it? First up, I'm going to give an honourable mention to a company I like a lot. It's called the Elmusak Group. I think that's how you pronounce it, listening to their calls. And that is trading at 29.2% under its current value. What I like is it's the link between the house builders and the manufacturers. It does renewable, which kind of future-proofs it a little bit. Materials that it provides to the house builders, and focuses on water management and a few other segments. So it's a very interesting one. It's got a decent outlook for the future, and whatever you think about the building industry will play into that a lot. However, I won't go into it too much more because I think we're going to outstat one and compete TriStel against Gamma Communications, a technology-based company. Yes, another one, but this focuses on B2B exclusively and seems to be focusing on stable communications. So I think it's relatively uniquely positioned. It's got an undervaluation, according to Simply Wall Street, of 40.2%, and it's got a very healthy balance sheet, which is important when you're looking at these AIM-listed companies. You want it to be sustainable. It's got a history of growing earnings. If you just have a look at that little number, it creeps up year on year. So hopefully that shows us good growth to take us through TriStel's one very quickly. It's also been making 1.63. That's slowly increasing year on year, and they are expanding as well. So this one, Gamma, is making slightly more. It also pays a dividend, although it is very small, 1.5%, and it is buying back its shares. So have a little look for yourself, and it's very close between these two. So there you have it. Which one should we invest in? Please add a thumbs up next to the applicable comment below, and I'll invest in whichever one gets the highest number of votes. However, from my perspective, I think we should invest in... We're finally seeing a bit of green in the markets, and it's officially spring, so I hope that's a good omen for your week and you have fantastic weeks ahead. Thank you so much for watching.
Goodbye.